irgendwie Liste mit dem Pitching und wie auch immer. Here, right here.
Wenn Sie eine Präsentation haben, die hier.
Here you go.
So, hello and welcome everybody. This is Joern from Startup Radio. I'd like to welcome you today to a joint meetup together with the FinTech meetup guys, Felix and Yasin. Yasin, oh, there in the back. Thank you guys. Thank you guys for helping us arrange this. And there's also in the back, there's Kirill. He's the guy who is looking that angry and he's in charge of tech. So if everything goes wrong, it's his fault. And I would just like to start with thanking our sponsors, Livo, the stuff you could try at the beginning, Deloitte Consulting, SKW Schwarz Rechtsanwälte, as well as Accelerator Frankfurt. And I think because we're in the rooms right now of Accelerator Frankfurt, and I do believe Maria wants to say just a few sentences on that.
Thank you. It's a great honor for us, especially it's a dream come true for RAM to have the FinTech meetup in our premises. So wonderful to have you all here. And who of you does not know Accelerator Frankfurt? Oh God, there's one, two. Okay, I can leave that. Two people who doesn't know us. Now you will know what is Accelerator Frankfurt. So what is Accelerator Frankfurt? So we are very short, a 4-month acceleration program for startups. At the moment we have 8 startups in our program, 3 early stage ones, I would say 5 a bit more advanced. 2 of them come from München, 1 of them is pitching today, Wroomer, and 3 of them are from Israel, and 1 of them, BeeEye, is pitching tonight. I think you can all look at the website and get some more information about startups. I don't want to steal too much of your time. But of course, all of these would not be possible without our strategic partners, which some of them are also here today. We have Byte & Burkhardt, who has provided us the location and of course gives us legal services. We have DeFi. I think we have at least 2-3 people from DeFi there. Wonderful. And they are of course the brains. These people have the highest concentrations of physicists and mathematicians in the, I don't know, whole Europe at least. And then of course you need always to have a good UX UI, and for that we have DFirma from Wiesbaden. So many thanks for all our strategic sponsors, and of course all of you guys who support the Accelerator Frankfurt. And so happy to have you all here. Back to the thing.
Thank you very much. Thank you for having us tonight. Guys, you always see this blue sign here. Many of you already lost it in their minds. It's still Twitter, it's still out there, and make it burn tonight, hashtag FinTechFFM. And now I would like to introduce all the guys here. Maybe you can do it yourself. You want to start here?
Sure. My name is Lars Reiner. I'm from Ginmon, a Robo advisor based here in Frankfurt. We started in 2014, or that was when we were founded. Our product is live since May last year. We have this year we have finished a funding round with a passion capital VC from London. So we are currently working on scaling our business here in Germany and starting our international business. More on that I think in the later discussion, but maybe just a little bit on my background. Before I founded Ginmon, I was actually working at Deutsche Bank. So we will see this here in the panel once more. And before that, I have a background here. I come from Goethe University, where I also was founder of the Goethe Investment Fund, where we built investment strategies for the endowment fund of Goethe University. So much for my question.
Twice actually on Deutsche Bank. That's also my background is Deutsche Bank.
Right.
So my name Julian Stolzenbach, definitely a hard name in English. Deloitte Consulting, part of the wealth management practice in which we really focus on Robo advisory at the moment. That's also a reason why I'm here. So pretty much speaking with the team, and some of my colleagues are here as well tonight on speaking with Robo advisory companies. So Lars, obviously, Oliver, and some others across Europe. So really a field where we see a lot of potential, but also a lot of let's say lessons learned to be talked through over the next couple of months and years before that really could become a big game changer. And yeah, on my background, so before that, actually a couple of years in consulting before joining Deloitte and then DWS, so part of Deutsche Bank. That's my background in asset management. Yeah.
Cool. So my name is Olaf. I'm one of the founders of Vaamo, one of the first Robo advisors. I mean, we started in 2013 and actually went live 2014. So a couple of months earlier. That's not a quality sign. Being early is not a quality sign. So I just mentioned it. So you know. But I think it's very interesting looking back the last 3 years how much the landscape has changed and the interest in the topic. I mean, when we started 2013, I really think that no bank thought about robo advising. There was nothing like a fintech meetup here where there was you could form a panel of robo advisors, actually all from Frankfurt. So I think this very new industry has seen a dramatic development over the last couple of months, where now the whole industry, including the banks, are really looking into robo advice and trying to understand how that will change the industry and how they can use it. So it's very exciting times, and very happy to be here.
Yeah, Olaf Zeitnitz, Managing Director of VisualVest. We were later, but we were the first coming from incumbents, so because we are owned by Union Investment. You might know Union Investment here, one of the big players in Frankfurt or in Germany. We are a robo advisor like Vaamo or Ginmon too. We started in January last year and went live this year in March, and we try to catch up. I think we already catched up. We try to be ahead in the future. My background is I'm from physics, like the DeFi guys. They work for Union Investment, I know too. And I come from Union Investment. I'm the, let's say, old guy coming from the old economy, and I hired then younger guys from other economies to start the business.
Welcome to the cool business.
It's much cooler, I love it.
Hi. So I'm the one in the group who's still working on a robo advisory solution. So my name is Jürgen von der Lehr. I'm heading the digital innovation and think tank for Deutsche Bank. And so working on a lot of stuff like robo advisory, but also blockchain, cognitive analytics, but also the question how we can actually expand the ecosystem of a bank. Yeah, prior to that, I have my background in consulting area, and finally joined Deutsche Bank then.
Welcome everybody. Now we heard quite often the term robo-advisor. I hear some laughter there. Can you just give us a brief idea what it means for you? Because what everybody has then in mind is like a little robot checking off some boxes or something, or reading Financial Times. Could you just tell us what your robo actually does?
Yeah, I'm happy to start with that because it's one of my favorite questions. Because it's one of the things that is most misunderstood in this industry. So I think the term of robo-advice is something that was given to companies like that, starting in the US, I think, by media, by competition, I don't know, by Cubans that try to basically make it look bad in a way that you say, okay, do you really want a robot to manage your money? And they try to let it look in a way that this is something of less quality. The thing that is for me a problem with this term is that robo-advice some kind of suggests that you are actually looking at real financial advice here, which most of the robos don't even try to do here. What we basically, or what Ginmon is trying to do is, or what we are actually doing, and what we are, I think, doing quite successfully so far, is that we are automating portfolio management. So we are looking at clients who have some sort of money they want to invest well, and they are looking for someone who automates all the processes behind, automates the portfolio management. They look for platforms that help them to do that, because they maybe don't want to do it themselves. They know that they can't do it the same way or in the same quality as an automated technology can do that. And this is where really the technology also comes into play. Obviously, advising, like an advisor that really takes his time maybe 2 hours to really spend that time with the client to discuss everything from financing the house to retirement. That is something that currently robo-advisors, at least currently, are not looking really to automate, because it is actually very complicated. It is something that where you need to dig into a lot of details, and that is actually something that companies and startups usually don't start with. You usually start with something that is easier, and where technology can quicker actually give larger value to the client. So you start lean, you try something where you can really bring some use in a very quick, and I mean it's still complicated, Robo guys. Don't get me wrong, the detail is there's a lot of complication in the detail, but it is still much easier to automate portfolio management than the whole advice, which on the other hand I have to also add is still in many ways much better than what you get at an average advisor in a bank, for example. That is something you can hardly call advice, where people are just like, okay, you're like 30 years old, so we take 100 minus age, 70, so you get like 70% stocks or something like this. This is something you actually see in bank branches, and this is obviously also no advice. So I think, to be fair, robo-advice currently doesn't really aim to become real advice, or to at least be today real advice, but also it is still in many ways actually better than what we see for the average advisor. So that was maybe a little bit longer than it should be, but I hope you at least got my point.
Still we have time. Just really quick, maybe for me it's important to differentiate between digital advice, and you just elaborated on that one, which is also a big and important topic. But then really coming to robo advisory is it's digital, it's automated, it's hopefully learning one day, as it should be, and it's an investment. And for me, big point why it's so interesting is really bringing people back to the capital markets. We lost a lot of them in 2000 and 2007 again. So really bring them back in a different, a new way, and especially all the young ones, I don't know, 20, 30 years old, giving them access to capital markets. So that's really what's interesting, and where the players have definitely some big advantage over banks and asset managers.
A lot has been said, so I think you totally covered it, but I think really also the last point, bringing a very fair, professional and cheap in a positive way, because there are not much fees involved, solution invest into capital markets. I think that's at the core of every robo-advisor.
In my opinion, there's not one kind of robo-advisor, there are different robo-advisors. I mean, you have the portfolio advisor. We try to give advice. It's quite simple at the moment, but not too bad. And we legally also agree that we're giving advice, so we are liable for that also. The other robo-advisor is trying to do wealth management, like liquid or scalable. They're not here, but they cover a different kind of group of people with a lot of money, 10,000, 100,000 or more. Then we try to reach clients with just €1,000 or €50 savings plan. So it's completely different to target these clients than to target clients, wealth management clients with €100,000 and a lot of knowledge maybe. So there's not one kind of robo-advice, there's a different kind of robo-advisors for different kind of customers and different kind of needs. And this is yet not, let's say, it's quite coarse, the distinction between these different robo-advisors.
Maybe to add on the things we've just discussed, on which is basically on the terms what a robo-advisor is. Maybe from a let's say typical banking perspective, I think there's one really distinctive thing about this, which is democratization of wealth management actually, and it gives, given the whole regulatory environment, which makes the advice in branches quite difficult for banks. I mean, in particular for smaller accounts. From that perspective, robo-advisory really helps people giving people access to, let's say, an advanced wealth management or investment process, which they wouldn't get in a branch anymore. And I think that's one of the most important things about robo-advisory.
So what I would take from all of you guys, it's basically some algorithm is managing a portfolio of either funds or directly equities and fixed income on your behalf for any size of wealth, for any size of money. Would you all agree on that?
Yes, I do agree, but I want to point out, I think that a very, very important component of the robo-advisor is this, I mean, you call it to give access to something like this. I mean, to have the fully digital process, the digital access, everything is easy to do and to understand and so on. I think the transparency, all these kind of things that has nothing to do with the investment process per se, but is more the way how the customer interacts with the product. I think that makes the big difference for most of at least our users and customers. I mean, when we ask them what is so great about Vaamo, the vast majority says something around it's easy to use, it's it doesn't cost much time and so on. It's all about a lot of the argument is about convenience, even more than about the investment process itself.
And maybe just to add on that one, it's at the moment at least it's not on the product. Most people will know that you guys use passive funds and invest different through ETFs, and most of the people will never understand the difference, and that's totally fine. It's even not that important, so it's really not about the product, and definitely it's not going to be in the future. It's really about what you just said. It's a process, and bringing people that kind of whole process and bring them back, not into the branch, but have another contact point where people will go to the branch. I mean, let's face it, who's going to a bank branch anymore? Really, I mean, I don't know. Sorry.
To the branch stuff. I mean, we talk to banks, mainly because we come from the cooperative banking sector, but also we have a lot of interviews with our clients. It's strange to notice, but a lot of people, more than half of the young people, still want to go to a bank. They want to buy the product there, but want the explanation about the product and the platform. So in the beginning, the starting point could be in the bank, and I have a lot of advisors from banks. They ask, how can I use that product, that tool, the robo-advice tool, in the bank to give the advice in a smarter, easier way to our clients. So it's interesting to see that somehow a hybrid world could be possible, will be possible in the future. And still a lot of clients want the starting point, explain what I buy, explain how I can do it, and then I do it on my own. And that's, for me, a smart idea, because at the beginning we all noticed robo-advice is not really, let's say, collecting billions of euros at the moment. That will change, but it's changing slowly at the moment.
You still want to say something?
Also right.
Oh, okay. What I hear from you is that you do something really nice and novel in investing for people. So I would be curious, on behalf of which people are you already investing? So whom you are advising? Who's your client out there?
So I think this is something that really, as we said before, robo-advisors do differ, and so do their target groups and their customers. And for us, for our clients, I think convenience is also important. That's obviously something that people are also looking for when they use online platforms, which are also accessible, obviously, around the clock, and I don't have to get into the branch until 4 before they close. That's something that is obviously more convenient. But they also, our clients, that's something we've learned. They very much look at, well, how do we invest? How transparent are we about what we do? How much does it cost? And these are obviously the sales arguments that we have, because we really try to be very transparent about what we do. And we've seen that when we started, we've thought that this is something for young people, for around 30, right? So young professionals from 25 to 35. And that's something we've seen that the market is actually much larger, and it's much more interesting even for also older people. I'm not talking about retired people only, but everything in between, right? So we're actually looking at target at average customer age of like 45, something like that. And we are looking at much higher assets under management, so the money they actually put in than we originally thought. And so this is something that for us was actually very interesting, because usually as a startup you struggle to achieve your business case, but it rarely happens that you actually exceed it in a way that you earn much more on the clients that you originally planned, and they actually put much more money in than you originally planned. That was obviously something that is very interesting. And so we cover basically all the different clients from starting from 1,000 euros up to 7 digits, so millions of euros. And that's something that we never have believed before, that people would actually put in an online platform like ours in this early stage so much money. And this is something that for us shows that this is actually a target group, whereas I know that Jürgen, for example, of Deutsche Bank would also be happy to get this target group, because it's like prime segment, right? This is a prime customer that every bank wants to have. And this is something that was interesting for us to see, that this is actually something that a startup can achieve, and that was good to see for us. And it also shows that that we are already here in the mass market.
Yeah, the customer group varies greatly. That's true, but I mean, maybe I can add some figures from a Vaamo perspective. So I mean, our customers on average 40, so it's 38 to 40. Unfortunately, it's like 75% are men still, and on average, that's what we learn from focus groups and from surveys and so on. Most of them know something about capital markets. So I think still we see that robo-advice is attracting people who have some background knowledge. So I think the great idea that we also follow to really open this to the mass market, that's something I think we do not yet see, right? But maybe that's also a normal thing, that you start with a smaller target group that understands quickly the benefits of the product, and from there I think it spreads.
Yeah, we try to attack the mass market, but it's really hard to attack, because for majority of the people, the opposite to sexy is finance. Huh? Yeah, it's really true. I mean, you can ask people, they rather go to the dentist than to the bank and have advice. But the problem is, the people have no knowledge. That's the majority of Germans. Even the academic people have no knowledge about finance, and they don't want to have knowledge about finance. They don't want to learn. Even if you try to bring it really to a simple, nice homepage with information and graphics, the people, the majority, I talk about majority, not your clients, I talk about the normal people. So it's really hard to explain to them that it's easy to use, and they don't have to have not enough knowledge, but at least they have to try to read, let's say, 10 sentences. You have to ask the customer, but it's really hard to do that. We have a lot of traffic on the platform, but the conversion rate is pretty bad. So it's a matter of interest.
Would you mind to tell us how bad?
Yeah, it's 0.3%, which is quite low. I don't know if it's higher for you, but it's pretty low. So it's really not good. So we have to, the interest is there, and we think it's the knowledge which is missing, and the trust. The trust in a brand I know. So even the young people, they don't like the banks, but I trust them much more than any startup company, which is true today. It might change in the future, but in Germany that's the truth.
Maybe to add on the target group, I think from a banking perspective, or from a typical bank perspective, any of your clients you described would be very great in terms of age, because I mean, our average age of customers in private banking is roughly about over the 40 or something. So now, I mean, to be very open, I think robo-advisory is one of the targets is also to aim at acquiring new younger customers, and also to get them into the investment business at all. And I think from that perspective, we all need to deliver on the question how to actually educate customers that are not educated and don't know anything about the whole investment material. And I think currently we're all aiming at customers that are already in this topic, but in a more social from a more social perspective, we need to deliver the educational part as well.
Actually, you guys have gotten a little bit ahead of me, because I was just planning to talk a little bit about the clients and then the problems with acquiring clients, because when I read this, I stumbled on the very old quote in investment management: nobody got ever fired for buying IBM, meaning rely on the old stuff and all of this. So I was wondering how how you actually there may be, or there is a group of early adopters, people who know about capital markets, people who have some money to put in a robo-advisor, but how do you get beyond them? Do you feel like some kind of resistance? There's a certain group you can have, and then you have to really adapt your marketing in order to reach them? And have you already passed this point?
I tried to make it shorter now. Okay, so I can actually agree on everything that has been said before on that currently we see the experts investing in robo-advice. And I think this is also and on your last question, have we already achieved the point where we are really in the mass market? No, probably not. But I think these early adopters are also the key for that. Because they are the people, if you look among your friends, these are the people you look at when you ask for financial advice. If they tell you, I'm investing with a robo-advice and I'm investing whatever, with Ginmon, then these are the people that you look at for telling you how should I invest my money. You're usually looking at these people. And these are maybe the people who have studied finance as well or whatever. And I think this is also the key how to get really into the mass market. It is a way of educating clients, but the customer base is also key to that question. And I think if we manage to close this to a critical mass, then we will easily also address at least larger parts of the market. I think some parts of the market will never be achievable for us, or that they're just too far away from educated financial backgrounds to ever be achieved by this. But I think this is normal. So is wealth management today. So we don't really want to have 100% market share as Prof. That's okay. We can live with that. I mean, it's okay.
Yeah, I sort of fully agree. I think the market is so big, and this potential early adapter market segment is still big enough, and that it probably takes some more time to really get a bigger market share there, and from there on, I think you're getting to the other markets. And then I think, in the end, it's also a new way to invest, right? And people need to slowly, but eventually, they will understand that there are new opportunities and new ways to invest. And I think everything that's going on right now, all the press coverage around it, all kind of meetups like this, and also bigger banks engaging. I think that's also a very interesting fact that once bigger banks start, and I really hope that Deutsche Bank once starts to put millions into advertising on robo-advice, because the more, I mean, that's making the market to a certain extent, and then also helps the whole industry. And I think for a startup especially, it's very important with limited resources at the beginning to focus on where you have the early adapters actually, and not to aim at educating the world that you have the best product, because that would be very expensive.
Okay, we try to attract two target groups at the moment. One is wie bei Novindel.de, Mama Papa Seiten, all these kind of things. So we try to attract young parents, start a saving plan for your child. So it's a good idea, I think, and we work with bloggers and influencers, and we have paid content and that stuff. And we try to attract these groups because we think it's a good target group, a new target group, and the saving plan is a good idea for these parents. Obviously, young starters, young urban professionals, that's an old wording, but millennials just started their working career, and they have their first bonus. Maybe when they work for a bank, they have no bonus any longer, but but in other areas, maybe they have no bonuses, and we track them here, invest your bonus in a saving plan or in a one-time investment. And so we go to Xing, and we have an advertising on Xing and these kind of things. And exactly that we were founded for, to see what works, what does not work. We also have some YouTube star we sponsored with a lot of hits, but no clients, because there was a YouTube star, but all the followers of this YouTuber were 15 years old girls, and they have no money to invest. So that was a nice try. It was good. I think it was okay, but it was, we noticed that doesn't work. So we go to the next idea and we try the next idea.
You want to say something?
You want to say something? It's totally fine if you don't want to.
That's right.
You can skip this, okay?
I mean, I just wanted to mention that we also need the politics actually to support the whole thing, but I think this will take all night, this discussion.
Yeah, we can totally agree on that. We've been talking, you guys doing automated investment on behalf of people. What do you offer in terms of investment? You say, okay, this fund, and that fund, and that's it?
Okay, sorry. I think probably it's a little bit more complicated, but I think at least all the members here on the panel, I think the science has shown over years and like decades, probably not only years but decades, how to invest. I think the key elements and the key element that most people do wrong is you need to diversify your portfolio very widely across asset classes and geographies. I think that's one thing. Another thing is that you have to be very cost conscious, and if you do that, then you get basically a good return for your risk. And I think this is a very basic concept, but it's done wrong most of the time. So I think all robo advisors make sure that you can implement that concept, that you can stick to it. I think that's also the thing, stick to it over the years. And then of course I think there's a lot of things going on in the background, because even if you got the concept, then you need to find the right target asset allocation, you need to rebalance it continuously, you need to monitor it, you need to rebalance it, you need to find the right investment products, right? Because I think there are right now by far over 1,000 ETFs and index funds in Germany alone. So what are the right ones? Also the landscape is changing constantly. So I think there's a lot of stuff around that we just take away from the customer, and they don't need to care about it.
I think the most important part, as you said, is sticking to your decision at the end. I mean, having something that helps you to rebalance or optimize your portfolio given the current market environment. Because most of the people, if you look into our self-directed or self-managed products that are managed by the clients themselves, then we see that they're kind of, let's say, counterintuitive are acting. They always buy and sell at the wrong point or market situation. I think robo-advisory or digital wealth management is something that is coping with that situation and flattening that.
Oliver already told about the importance of all the details when it comes to choosing the right ETFs and products and so on, and rebalance and so on. But one thing that is really important, and also goes in the direction of what Jürgen said before, is that we've seen, and many studies also show that ETFs, which maybe some of you already use, are not the solution to the typical problem that we see with private traders. So they take an ETF, but they still sell it when they're down, and they buy them again when they are up. So this is something that is typical for normal stocks, yeah? But it's true the same way for ETFs. So just investing in a DAX ETF or an MSCI World is not the solution. You really need a platform that helps you to build the right asset allocation, to manage your portfolio, and you need to trust that platform that they do it always right for you, that they always help you to stay through all the different phases in the market, and they also help clients to take out the emotion of investing. And this is, I think, one of the major benefits of robo-advice, that people start to trust this and to don't let their emotions ruin their investment experience and also their investment return anymore. And I think this is very important.
Okay.
Sorry, maybe just from a client perspective, because I don't have a robo-advisor. You guys can do that. It's what you guys said, it's diversification, right? I don't have the time to follow stock markets on a daily basis. I don't have the time to then, oftentimes then buy high and sell low. That's usually the case for most of us. So it's really, I don't think there's a big difference between most of the robo-advisors out there. So you can't go wrong in terms of going with Ginmon or Vaamo, just saying, to be fair here. But it's then really what comes next, right? So from our point of view, it's really the robo-advisor, let's say 5.0, 6.0, whatever you want to call it, is not out there. That's kind of a landing club in robo-advisory. That's really kind of a game changer, and where people will, and we're not talking about this early adopters, but the people who, like moms and dads from Windeln.de, not have been there, but maybe one time, they understand, okay, I can go back to capital markets, I can invest into equities, not directly, but via ETFs or passive funds, whatever, and I can build wealth, right? That's for banks, wealth managers, saving banks, it's all the same. How do I get people into investment products? Not because I want to earn money on them, but it's a good thing to build wealth and one day buy a house or funds a first, I don't know, driving license for my kids, something like that. So that's really, for me, not a big difference in the robo-advisors, but the chance to invest, diversify, and I don't really have to look at it on a daily or weekly basis. That's a big chance.
Yeah, maybe one important information. We are owned by Union Investment, but we sell only funds not from Union Investment. So we have like the others, we have the ETF portfolios, and Union Investment has no ETF. So we have BlackRock and all the usual stuff with that. We have 7 portfolios with active funds, also not from Union Investment, and we have 3 portfolios sustainable funds. That's what we try out. We asked our customers, and they told us we would love to have a portfolio out of sustainable funds. We started that in summertime, in May or June, and I think we have like more than 20% of the customers buy these active sustainable funds. Are much more expensive than ETF portfolios, but people like it because the advantage of buying something sustainable seems to attract another group of customers. So that's an important information for us. But I think the rest is everybody in the rubber market knows how to build a portfolio and keep it on a good level. So the product side is usually exchangeable. It's more the service side which differs in the target group.
Okay, just to close up this little bit where we touched investments. When I was preparing this, I was wondering, okay, what was the last big crisis? And actually, the Brexit, a lot of equities went down, the British pound went down, and I was wondering, how did your clients fare there? What did happen to them? Did they get totally erased? Did they not notice anything at all?
It's very, very interesting, actually, because it also shows again that obviously clients investing with robo-advisors seem to be more knowledgeable about that and more experienced with the capital markets. We've seen that because of 2 things. First, because of our investment strategy, and that is probably true for other robo-advisors as well, we've seen with the Brexit, the 24th of June, I think it was, the Friday after the vote, that where the DAX nearly went down 10%, a global diversified portfolio with some asset allocation where you have some stocks and bonds that only went down less than 1%. So that is something where people didn't require to be afraid of something because it didn't really went down much. And this is obviously due to the diversification, so spreading your investment across different regions, not only in Germany, not only in Europe, but also other regions and also different asset classes. That's something that is very important. On the other hand, we've seen that actually we had one of the best days ever when it comes to acquiring new clients and new assets from existing clients. So people actually put their money in when everyone was afraid of what is happening after the Brexit. And that's something that obviously shows that the clients are very experienced in how to act, and they would rather invest in that. And that's something that is true for ETFs in general. So I've talked with the different ETF providers, and they've seen the same. They've seen that the Brexit was actually the best time. So, for example, BlackRock, in the 6 weeks after the Brexit, they gained the same net assets like the 6 months before, in 6 weeks. So that's something that is typical for experienced investors, that they actually take these chances to invest in the market rather to go out. And I think this again shows that taking out the emotions is something that robo-advisors can actually support.
Absolutely, I think we had absolutely the same observations. And I think that the Brexit is also very interesting because this is a very typical thing the other way around, where people could make mistakes because nobody expected the results, right? So the stock markets really went down like 8-9%. But then the Tuesday afterwards, I mean, like 2-3 days later, I think all the stock markets around the world were already on the same level or higher again. So a very typical example of where you just shouldn't act and think long term, and then such a short term, and this was really a very short term crisis, that doesn't hurt you. And I think that's also where RoboAdvice helps you just not even think about it.
Yeah, not much to add. The same, below 1%, 5 days later plus 2% or something for medium portfolio. So that's been proof for the concept.
Okay, so really short one. Again, from client perspective, Goldman Sachs, they worked 24/7 before Brexit, right? So they had people working there and waiting for the decision and making the trades. We can't do that, right? I have to trust on my advisor or robo-advisor to do that, and they can do it, right? So that's easy for me because I can't, wherever I am that day, I can't trade like instantly on that decision, right? And I don't know what to trade, so that's a big benefit.
Okay, we want to keep this a little bit more for the non-financial guys. I think we used a lot of terms we will put in the show notes, and it will look like a library. Just in terms of investing, what came to my mind, what did I do with my first bonus that I ever got? I'm sorry, I bought a TV. I'd just like to touch a little bit on what you see right now as competition. So, meaning, do you think the robo-advisor will stay here? Do you think the big banks will enter? Or do you think you'll just expand and everything will be just fine?
So there's so many possibilities actually. What I see and what I think most of the people in the industry see is that there's no way around digitalization in that way. So I don't see any world where in 10 years from now people would still manage portfolios manually by hand, where a typical wealth manager would still like trade stocks and so on. At least not for the mass market. So I think this is going to be automated, this is going to be digital, and I think everyone who really invests now in providing the best technology to do that is actually going to be on the winner side. No matter if it's being through attracting customers directly on your platform or working with others and providing your technology. I think this is something where it's one of the largest trends in the world, probably, managing or digitalizing wealth management. And so I don't really have an idea of where it could be, but I'm very certain that everyone who is doing the right thing now is probably going to have a glorious future.
I totally agree. From my perspective, we will see several trends. I think the first one is we will further see some fintechs emerging in the market, but we also see more and more fintechs cooperating or liaising with banks in order to deliver the advanced solution to banks, which banks might not be able to deliver that fast as required. We will see banks that are delivering or implementing their own solutions that is fully adapted to their investment opinion and investment processes. We will see insurance companies entering the market because they also face some challenges how to cope with the low interest environment. So here's the other thing. I think they will also use the technology to enhance actually their investment processes for life insurance products or pension products and so on. And this is also something that is actually really disrupting or changing the world within banks as well, because they also will use the technology to improve actually their investment solutions. This is also true for actually fund providers or investment companies. And I think there's another trend in particular for the typical advisory banks or branch-based banks. They will also use the technology to enhance actually the advisory processes in the brand or in the branch. I think these are the trends we will see in the future.
More comments?
More comments from you guys?
Maybe one point, because I also believe that 5 years down the road, actually every bank will have its own robo-advisor. I'm 100% sure maybe they build it on their own or they cooperate, that doesn't matter. And I think beside all the aspects we talked about, I think there's another aspect. It's a way to also cater to a certain customer segment in a very profitable way, right? I think with all the regulation coming up that already exists and regulation coming up, for most banks, it doesn't make sense anymore to deal with people who want to invest only 30,000 or 40,000 euros. So because that is just too costly, and I think that's still the majority of the people. And I think RoboAdvice is a great solution to deliver a very good product to this group and be profitable. And I think that's another driver for banks to hop onto this technology.
And just to add on that one, it's again good to these clients where today they don't have the money, but they, I don't know, make a major in finance or something, work in an investment bank, so one day they will have some money to invest. You can already attract them, have them in your company, have the data, etc., and one day they become interesting for your wealth management. You can really offer them more service and earn more fees on them.
The assuming brand still matters a lot. So that might change in the long run, but in the short term, 5 years will not change. And you see that also in the United States. They had the first robo-advisors like Wealthfront, Betterment, but now the old players like Charles Schwab, which is direct broker, and Vanguard, next to BlackRock, the biggest ETF provider, they outmaneuvered all the newcomers by far. Charles Schwab in 1 year collected $10 billion, and Vanguard I think was 30 billion, and Wealthfront and Betterment still have only 5 or 6 billion. So the brand is still really attractive. So when the old players move, they can keep the market or catch the market. When they don't move, they will be gone in that market. Or you are a niche player and have a special target group. I talk about mass market always.
Just a short comment on it, so it really becomes a discussion today. Just a last comment. So when it's about Vanguard and Charles Schwab, it's maybe just important to know that these have been the largest providers before already. So if a big bank obviously provides a new service and they tell us their existing clients, then it's no wonder, and it would be really bad if it would be otherwise, if they already outmaneuver the young ones, the young companies in the first months. Obviously, if you do have billions of assets and you don't get them, and you don't get them transferred to the new service, which is cheaper than the existing one, then it would be really bad. But obviously, for a startup that starts at zero, it is obviously a larger challenge to actually attract these volumes. So that's maybe just a short comment on why you not really can't compare incumbents with startups. This is maybe just important for the old economy to also consider. Yeah. The better product is not the one that has the most assets under management, but the one that grows the fastest.
More comments on that? Just looking, you don't need to say anything.
Oh, well, I can only comment on the Vanguard and Charles Schwab, because I think one of the major success reasons is also the hybrid model, that they also offer kind of phone advisory, so which also shows that the world is not yet fully digital only. So there's still a kind of hybrid world, and I think that is one of the major success factors. Apart from the base they started with of Vanguard and others, and I think this is also a kind of hint for, let's say, the bigger players that they will start in this area, because they also will need a kind of hybrid approach for the next couple of years.
Well, again, US and UK are also different, right, in terms of client behavior.
Sure.
So we don't have that kind of phone device, phone brokerage. So you said it's definitely a new and different product offering, and it has a great potential. Again, it's a risk if the established players understand the potential and build it on their own or do a cooperation, because they have the money they can try to shift over, right? So you have to win those clients who somewhere have their money already placed on. Maybe not invested, but you have to bring them to your product. So starting at zero is obviously more difficult than just saying Deutsche starting a robo-advisor, and if just 10% they can shift over, it's already a success.
So my man behind the camera has showed me our time's already over, but since we have an overdraft here, I could just ask the last closing question. There's always enough time for that. Could you make it brief and just everybody tell the people here listening and in the internet watching, what should they keep in mind from you and everybody here? There will be later on a Q&A session, so if you have a question to one of the people, just note it down now.
Yeah, sure. I can only encourage everyone to have a look at what the different providers here actually provide as a service. I think it's obviously something that is great for everyone here as well. I think it's an interesting industry for everyone, also for the ones who may be looking for interesting jobs, especially in Frankfurt.
Can just copy that one. Really, just look at Robo Advisory and try it. It's great in terms of what they offer, also gamification, that kind of stuff. For us, ourselves, my team, we look at the Robo Advisors pretty much every week and try to really understand what is the USP and where is it going. And over the next 5 to 10 years, there will be a lot of will be happening in Robo Advisory. So it will make it even more interesting, even for all the ones who don't know about passive and ETFs. That's fun. Sorry.
Yeah, it's very easy to use, and I think I can. All the 90% of Germans who do not yet invest in capital markets, I think I can only urge them to do so, or at least to think about it. Because if you want to build wealth, especially all the younger people, I think that's really the way to go. And Robo Advice is a very easy way to do it, even for people who don't want to spend much time and don't know too much about it.
Yeah, try it. You will love the convenience. It's great.
I would also advise everybody to be very open to these solutions, but carefully analyze which one is most adequate for your demand.
For us, subscribe to our podcast, Startup Radio, and we do now have 4 startup pitches, I do believe. 4, right?
4's right, yes.
4, and I'll hand over to Felix, who will come here and have the pitches announced.
I have to say, like, standing in the middle of the circle is never good luck. But let's see what's happening. First of all, thank you all very much for the discussion. I enjoyed it a lot, and please. If you're not in a hurry, you're very invited to stay, and we'll ask you about some feedback for the pitches as well, since you're officially the experts now. And I have to say, this is a very advanced difficulty level, because if you stand here pitching, you have to basically turn around to address everybody. But there's the camera, I suppose. There's the presentation for those who brought a presentation. Can we dim the lights a little bit? Is that possible somehow? We're going to have 2 pitches from the investment space, actually. So we stay in line with what we heard before.
Should we move or stay?
Well, you can just stay, make yourself comfortable. And we will start with Berries. Berries is, you could say, a robo-advisor. And on our event, we introduced Mike, but now Yannick will step in for him. It's 3 minutes only, so tough schedule. I think Yasin will take the time for you.
That's fine.
And well, tell the people what you want to tell them.
Hey guys, my name is Yannick and I'm happy to introduce you to our startup Berries tonight. Okay. The statement that describes Berries best is probably that we make investing incredibly easy, and we do so by giving you the opportunity to invest your spare change. During our university studies, my co-founder Mike and I, we both worked as financial advisors for a large insurance company. And in hundreds of personal consultations, we noticed that people make the same mistakes in handling their money over and over again. Probably the biggest mistake among them is that most people simply do not invest their money at all into the capital markets. In Germany, for instance, 85 out of 100 people completely shy away from the stock market. And at Berries, we are eager, determined to change that. And this is how we do it. We connect investing to something that people already do every day, namely spending money. You connect your credit or debit card to the Berries app, and from then on, we automatically round up your purchases to the next euro and collect the rounding differences for you. This is what we then call a roundup. The roundups that we have collected for you will then be invested into your Berries portfolio, which is based on Nobel Prize winning standards of modern portfolio theory. And all you have to do is to simply lay back and watch how you achieve your savings goals. Thereby, we bring the well-known concept of piggy bank saving into the world of electronic payments and investing. However, since investing roundups means to invest small amounts quite frequently, people sometimes ask me if roundups would be nothing but a gimmick. Well, in our opinion, this is definitely not the case, because as always, small things do add up. If you invest just €1 a day over a 5 years time horizon, you would end up building assets of €3,300, which is already quite something. But even more important is the fact that you started to get invested. You started to participate in the capital markets. And what we heard today quite frequently is that the current solutions don't manage to get people into the capital markets and to get them started. But with our solution, we solve exactly that problem, because once someone has invested his first 10, 20 or 50 euros of his own money and has his own skin in the game, he's much more willing to listen to us when we want to transmit investment knowledge to him. And this is, in the end, exactly what we want to accomplish. We want to build up a large customer base by offering them our roundups and then motivate further investments after we build up trust and after we transmitted some knowledge. And this is what we will do from next year on with our solution, the Berries app. Until then, you are all welcome to subscribe to our newsletter on our website, berriesapp.com.
Yep.
Great timing.
Yes.
Guys, any questions here? Any questions here in the room? Questions? I got a microphone.
Also from this side, oh, we got one.
Oh, over there. Oh, wait, there's a question here.
I would like to know, how do you invest the money?
The money is invested into a market portfolio. The next question that people ask us usually is if we do that by ourselves. The correct answer to that question would be that we are not responsible for your investment decisions, for the investment decision, but that we let science make the decision. Just like Oliver said earlier, there are tons of studies out there how you should invest your money, and we basically just put these findings into practice for you, which is a broadly diversified market portfolio. Passive.
How often do you do that? So I collect €1 a day. So how often do you invest then for me?
This depends largely on your spendings pattern, because we do not invest the roundups as they occur, but we collect them virtually in your app for you and invest them as soon as they exceed a threshold of €5 in total.
If they're collected virtually, does that mean that it could happen that you spend them already before you actually invest them?
No, because we don't execute a direct debit before the €5 threshold is reached.
Okay, very last question from the back somewhere. Oh, you got it already.
What is the average return like over a cycle? Quantify, like how is it perform with the standard market indicators? You told it's Nobel Prize winning, right? So
yeah.
I'm just curious to know.
Well, obviously, since I said that our investment strategy is based on a market portfolio, our goal is not to outperform the market. That's not what we promise our customers. We simply promise them that they will do better than 80% of all other retail investors, simply because we can replicate the market performance for them, the market return, which lays at around probably 6 to 8% in the longer time horizon, which would be still not a quite offensive guess. But in the end, it largely depends on the portfolio that we find for you together. Since our algorithms make sure that the stock ratio in your portfolio always matches your investment time horizon. It would be that for shorter investment goals, the stock ratio would be simply lower, and therefore the return, obviously, the expected return would also be lower. So the correct answer would be it depends on yourself, on your personality, on your situation, and also on your investment time horizon. But in the end, we replicate a market return.
All right, I'd say for the time. Yannick, thank you very much. We sometimes had a vote, like an official one. Today we do it separately. We ask you guys what you like best afterwards, and then you should clap for your winner. And now next on stage, Dirk, or Professor Dr. Dirk Söhnholz, however you want to be introduced.
Dirk is fine.
Great. And he will introduce Diversificator to you. That's also from the investing space. I think this mic is not working too well, so maybe if we have another one so that...
Just give mine back.
Whoops, thanks. This one works. Don't start with. Okay. For the English people, I will give a private translation later, so that I can speak in German now. Also in Deutsch, sofern ich meine Folie dann gleich bekomme. Diversificator ist kein Robo-Advisor. In erster Linie bezeichnen wir uns als Portfoliostrategen oder Online-Portfoliostrategen. Wir sind tendenziell eher ein Wettbewerber zu klassischen Fondsanbietern oder Asset-Managern. Unser Claim ist, wir sind 80% anders, und zwar 80% anders als klassische Fondsanbieter, Asset-Manager, aber auch durchaus als Robo-Advisor. Was steht dann bei uns an erster Stelle oben rechts? Man kann diese gelbe Schrift hier relativ leicht lesen. Es geht in erster Linie um Performance, also risikoadjustierte Rendite, nicht so sehr um Prozess oder Technik. Wir sagen, die beste User Experience ist eine gute Performance und die steht bei uns ganz oben und der läuft es extrem gut. Das ganze Konzept ist ausgerichtet auf B2B und C, das heißt, wir liefern Portfolios für Banken, für Vermögensverwalter, ETF-Portfolios, die besonders stark online unterstützt sind, aber der Endanleger kann sich auch selbst auf unserer Webseite bedienen, ohne über den Berater gehen zu müssen. Das Ganze ist ausgelegt für eher vermögende Anleger, kritische Anleger, wie wir sagen, High Net Worth, die schon etwas Erfahrung gesammelt haben und kritisch hinterfragen bisherige Portfolioansätze, andere Portfolioansätze. Wir haben eine andere Investmentphilosophie als viele andere. Wir sind keine Star-Fonds-Manager, also die Portfolios werden nicht getrieben von Stars, von Personen. Wir sind keine Quant-Manager. Quant-Manager sind eigentlich Blackboxes, die schwer nachzuvollziehen sind, mit Prognosen arbeiten, sondern wir arbeiten voll regelbasiert, aber ohne Prognosen. Also eine andere Investmentphilosophie. Wir starten mit einem Portfolio, das heißt Weltmarktportfolio, extrem passiv und haben noch 6 andere Portfolios entwickelt, unter anderem ein ESG-Portfolio, also verantwortliches Investieren, und ein reines Alternatives-Portfolios. Im Moment alles auf ETF-Basis. Das Ganze wird in der risikofreien Variante oder risikoärmeren Variante nicht mit Bonds, mit Anleihen kombiniert, die aus unserer Sicht nicht risikoarm sind, sondern mit Cash. Das heißt, wenn jemand risikoarme Portfolios haben möchte, kriegt er ETFs plus Cash und je risikoärmer, desto mehr Cash im Portfolio. Wir bieten auch Trendfolgesignale an, um das Ganze abzusichern, wenn man das möchte, als eine Variante. Wir streben volle Transparenz an. Der Endanleger soll das gleiche Wissen haben wie der Berater und wie der Portfolio-Manager. Also wir als Portfolio-Manager legen alles offen, online, man soll alles nachlesen können. Wir haben ein paar Tools gebaut, das Tested Yourself ermöglichen sollen, also Asset Allocation soll man testen können. Wir haben auch einen Pseudo-Optimierer gebaut, mit dem man Optimierungen nachbauen kann, Markowitz-Optimierungen nachbauen kann. Wir haben einen Small-Data-Ansatz, weil wir B2B sind, möchten wir möglichst wenig Wissen von Anlegern. Die Bank muss Informationen von den Anlegern haben oder der Berater. Wir selbst brauchen keine Daten vom Anleger. Wir sind erstmal teuer auf den ersten Blick, 1%, allerdings nur auf die Renditeteile, Cash natürlich nicht. Damit ist es insgesamt noch akzeptabel. 75% unserer Gebühren gehen an den Berater oder an die Bank. Und wir bieten das Ganze auch im Private Label an. Also wir sind auch in der Lage, eine Private Label Robo-Plattform aufzubauen mit Fremdfonds, wenn jemand das möchte. Kern sollten unsere Portfolios sein. Was suchen wir? Wir suchen Programmierer und wir suchen natürlich Vertriebspartner, Banken und Vermögensverwalter. Und was mache ich mit den restlichen 4 Sekunden jetzt?
Kannst du ihn grüßen, wenn du magst.
Viele Grüße an alle meine Oma. Ja.
So, it got way more technical after all. I personally like that a lot. Let's see if we have questions in the room then.
I can try to answer in English if you want.
That would be nice of you, actually. So I think at least the experts should have.
What is your distribution strategy? I think that's what I didn't get. So do you offer it do you have an own website or something, or you go through intermediaries and so on?
I have an own website. Everything is on the website. You find everything there. You can do self-service if you want.
So I can buy the portfolios.
You can get the ISIN lists on the website and buy the portfolios, implement them yourself. But the main business model is to go through banks and asset managers, like every other asset manager as well. Yeah, they distribute their funds, their portfolios through banks and independent advisors. That's why 75% of the fees usually goes to them.
I personally think you need to talk to the berries guys later on. This could be a good fit, actually, but that's my own personal view. So no more questions from the room here. All right, Dirk, thank you very much. And finally, we're actually switching topics. Hello, this microphone seems to work better then. So enough of investing, at least of Robo advice for a second. I'd like to ask Christian of Wroomer to come over here. There he is. Christian, you talk about something that people usually understand way more than investing, cars. And one thing before you start, how did you come up with the idea to name your company Wroomer?
Probably I have a very easy answer to you. You have been a child and probably also have been a boy. And at these days, what did you do? You played around with your car, vroom, vroom, vroom. And that's what that's what you want to do with your car as well.
That makes sense.
Yeah. So, welcome to the world of Wroomer. Yeah. Welcome to the world of Wroomer. We are all about cars, not about investing, but about spending. The challenge typically is you like your car, you like an expensive car, but you don't have the money. So we are the guys who help you with that. So we do car financing and leasing. And actually what we literally do, we stick the rate to the car. So it's all about the monthly rate. Is this important? Yes, it is for each individual, but it's a huge, huge market. So every year, about 3 million people alone are looking for young pre-owned cars, not older than 4 years in Germany, and 2/3 of them need to finance or lease their car. And we help them to do that. What is normally the experience the customer has? He has to shop around for good financing and leasing, and this is normally very intransparent, it's time consuming, and it's very, very hard to find a good deal in the market. We're changing that. Wroomer, 3 easy steps to car financing and leasing. You set your monthly budget, you select your car, and on our platform you see all the cars you like on your monthly budget with your individual settings. Next step, you add your personal data for the credit decision to be made. And third step, very easy, you just get your loan contract. And vroom vroom, you drive your car, your dream car home. What is our business model? It's a platform. We are a platform in the midst of the car financing ecosystem. We are combining the client with interesting car pools, currently working with AutoScout, and with attractive best price products from the financial industry, from banks, and increasingly also from insurance. Technically, we are a loan broker, so a licensed loan broker. Who is actually driving the Wroomer? It's 2 guys, it's Guido and myself at the moment as the founders, and there's also a CTO and CMO who also have some years of experience in the market. So we are not the youngest founders, but I think we bring some interesting experience to the table. So we are live. So go to Wroomer.com. You find around 300,000 cars at your fingertips with monthly rates, and check it out and enjoy. Thank you. I stay here.
So I have to say, I enjoy hearing something about not robo-investing then.
I agree. I've done a lot of asset management, but this is much nicer.
I wouldn't really say that because I actually like that topic a lot. But anyway, I can imagine there's a lot of questions around car financing in this room here. You're looking for a new car, Lars?
No, I did this just less than a year ago. And what I did is I went to whatever, Check24 or Smava, and I think you really do get very good deals there. So how does it differentiate? Is it just that you combine the platform where to get the car with the financing, so that I'm actually looking at the car and I don't have to like switch it over to the other platform and look for the right loan? Or
so that's one element, but it's a minor element. On Wroomer, on our platform, it's the place to get your car financing, because we don't only have consumer loans that you will find on comparison platforms. That's one way of doing it. But there are more attractive ways of doing it. like balloon financing, Schlussratenfinanzierung in German, or private leasing, or flex financing, where you can finally repay your loan whenever you want. You don't get that on traditional online platforms. You get it from dealers, but then you have to do always the one by one by one by one. And on our platform, you get them all. So you get the full car market financing market at your fingertips, and that's unique.
Anyone else? You probably explained it a little bit too well then. Thank you very much, Christian. And last but definitely not least, I'd like to ask Assaf on stage. He will present BeeEye, and he doesn't even need slides for that, because this topic is probably too complicated to put it on slides anyway.
Thank you.
We've been talking about robos, we heard the word algorithm. I think you spent some time around that word as well. He's doing risk modeling or risk scoring on a data analysis basis, and I am excited to learn more actually.
Thank you very much. So hello guys, how are you? My German is, well, not so much. I'm Israeli, we're an Israeli company, BeeEye. We're a fintech B2B company. We're working on machine learning and algorithms in order to create translation between your web presence, each and every one of you, as a consumer for banks or for other financial institutions. We create the translation between your web presence, social, search, and other open portals information into financial indicators, and enabling banks and other institutions to create better risk scoring and better predictions on which financial products are their customers are most likely to buy or most likely not to buy. Doing so, we improve their chances of making the most from their customers with the upsell and cross-sell, and improving their own current risk scoring. We're not trying to replace the risk scoring that banks do for 50 or 100 years, because that would be presumptuous. You cannot take the external data from the web and create new web scoring, but you can improve their own current model. We're doing so already with 3 very big customers in Israel, and we're entering the German market here, and already had very good meetings in Frankfurt, and I think that's about it.
I think that's a very good skill, taking something very difficult and make it sound easy at least. Thank you very much. Who has questions in the room? Let me start from the left.
Hello, thanks for the presentation. I have a question. How do you deal with the moral problems if you make a wrong choice? Thanks. It affects people.
Of course. So first and foremost, what we think happens today is banks make their judgment based only on your financial record. This is morally incorrect, because sometimes the bank do not know many things about you. What we're trying to do is make a customer that only gets 10,000 euros or even maybe only 2,000 euros from his bank account currently in consumer credit, and with external additional information that we can find, we can see that the bank should have given this particular customer more credit. This more credit would enable this customer to improve its lifestyle, or sometimes we can say to the bank, look out, might you given to this customer extra credit is going to be in trouble, and sometimes this is the helping the customer to avoid from the rope that will be hang him, because extra credit is not good for you. We're fully compliant with regulation, so when we talk with the Chancellor of the Bank of Israel, she expressed her explicit will that banks will know much better from what they know today when they give credit for their customers. Let's look at the competition. In 5 years' time, it could be Amazon credit, or it could be Google credit, or Apple credit. Those companies know very well who you are online and at all places. We're looking at the horizon, what the world is going to be in 10 years' time. This is going to be a non-issue. Everybody are you going to use this kind of information? But the dinosaurs, so to speak, the banks, do not use that today. And we think that we can enable them to do that better judgment already now.
What is the product or service that your customers actually eventually receiving? Is it just a single score, or is it a more complicated set of data?
Very good question. Thank you for enabling to elaborate on the product. So we have two products actually. One is Ion Risk and one is Ion Buy. The Ion Risk enables us to return a score based on artificial intelligence that enables the bank to have two scores. They have their own scoring models, like the Shufa or their advanced scoring models. In the US, it's FICO score, it's from 200 to 800 or something like that. And we give them an extra score that takes into account all the other information that we could find, combining it with their own financial records and melting those two together. Together we can improve their scoring methodology. In the buying prediction, whether the bank wanted to enable customers to buy, let's say, more deposits or more consumer credit or other type of product, we could pinpoint from the customer base of the bank which are the customers who are most likely to buy this specific product. That's the products that we deliver. And by the way, we give them another 5 indicators, we call it BeeEye features. It's supplementary information that they can insert into their own current models.
We have one question right behind you.
So, very interesting. What data is it that you use and that banks don't have yet?
So, actually, the 4 types of main bits of information that we tap into. One is the social, the entire public, only public, none is private or something like that. Only private, public things that you published online in social networks. Second one is the search, finding you, identifying. It's a very tough job to identify specific people online. The third one is government portals or municipal or even academic portals, alumni or stuff. Finding those types of information. And the third one is just databases that you can find. All are public and very legitimate because we're working only B2B, only with top tier clients, and it must be as wide as possibly can.
Just to add on that one, so I can't give you additional data from let's say, mobile data, for example. So there are startups in Africa, they work with mobile data. Very interesting because they say like, okay, you move between 2 points every day, so you have a regular job. You call 5 people a day or regularly, so we know you have a very secure social, let's say, environment, so we can give you a credit because you don't have all the data you just mentioned, right? On social media probably, but so can I enhance that scoring by giving you additional data where I feel comfortable sharing that with you?
If I had these points of data, I could definitely improve my scoring. Any additional data can improve the scoring. Currently, we use only the most public. We don't want to get into something which is not as clear at the moment. In Africa, you don't have other options, so everybody will be willing to do that. But here in the Western Hemisphere, where we go into the market in Germany, the UK, and the US, you have a lot of information about each and every one of us. Thousands of points of information that you can gather.
One question.
Yeah, since you talk about scoring, what is your false positive rate? That is like you give a score for a person who is not supposed to have that score, and what is the spread between your scoring and the bank scoring? Just to understand.
So, great question, but we're going to have to stay here the whole night, and I'll have to call Israel and invite some IT and some very top-notch data scientists that we employ in order to give the elaborate and precise question answer. So I'm going to skip and I'll talk to you later, okay?
I think that was a fair answer. I mean, the technical details can be discussed afterwards. First of all, thank you very much.
Thank you very much.
All right, I think before we're giving our vote for the best startup or for the pitch that we like the most, I would like to ask you guys sitting here just to give us your opinion. Just pick one.
It's not too easy, but I would pick berries. I love berries. And I suggest that you add a donation button, that you collect the money not for your own investment, but you can donate that to a charity somehow. That would improve the attractiveness of this platform for me a lot.
For me, berries as well.
For me as well, it's now getting boring, but I think it's really bringing, I mean, obviously I'm from the investment side, and I think it's bringing this idea of making it very easy to a next level, so I'm looking forward to see how it works.
I'm from the investment side, would love to go with berries, but the potential of BeeEye is really enormous, so it's just elaborate on startups from Africa working with mobile data and doing credit scoring on that one, so huge potential to go away from Schufa, which is a huge pain, and do something different.
I have to go with berries as well, or I love to go with berries, because what I think is it helps us a lot to achieve what we discussed before. So it's actually the complementary part of reaching like really the small investors that are not covered by any robo-advisors that we have seen today. I really hope that you're going to manage to do that, to reach these people, because I think we would need too much time to get them. And I know from the US that it actually works. There are companies that work like that, and I really hope that it works here as well.
Lots of berries, I'd say. So before we let you guys vote by applause, we still have your attention, and we should probably use that for some more information to be shared. What was that again? Oliver Nägler, where are you? You wanted to introduce something, didn't you? Okay, as long as he's still walking to the stage, I would like to send you some greetings from the guys of Maliki Group, actually. Those are the guys that are organizing the biggest finance conference week in Central Europe, I think. It's taking place not so long from now, in the week around 13th to 18th of November, exactly. And before you guys asking yourself why I'm actually advertising that, it's because they said the first 100 of you that get in contact with the project manager for the Euro Finance Tech, their FinTech conference on Thursday, actually do get a ticket for free. So I think that's a very nice offer of them. I mean, we calculate the values like 50K or something that they just put in here. But we got the website here. I think you checked how to find the contact data, did you?
Exactly. So it's basically not clicking on the obvious big red button, but rather choosing the small one here, which is right if you go to eurofinanceTech.com, and then if you click here, you will end up at this site here, which shows us the email address of Christine, who should also be here somewhere. Right, and if you send a very nicely formulated email to Christina, she will reward it for the first 100 with a free ticket to the conference. So feel free, and thanks a lot for putting this in here for the FinTech community. Thank you.
And for anyone who's actually watching online, because unfortunately the screen is on the other side, the web address is eurofinanceweek.com, and then you click eurofinancetech.com. I think you can use Eurofinance Week as well. Anyway, and there's a button in the middle called Yes, Tickets sichern. You should go for it. At the end of the conference on the Thursday, there's something pretty cool happening, I think. But maybe Oliver can elaborate on that a little bit.
Well, I have to invite for the Eurofinance Tech for the Evening Award as well on the 17th. We're going to celebrate this at our FinTech headquarters. So you can sign up at Christine, is the link on the website as well for the evening event, for the award as well?
We will share both in the comments later.
Okay, so please sign up there. It's going to be a party with some live music and some awards. The other thing is that we're going to host a hackathon together with IBM, Ogilvy, and eTexture in the end of November. You can sign up at Natalia. What?
Eventbrite.
Eventbrite. You can Google to Eventbrite and then look for IBM Hackathon in the end of November. It's going to be Outthink Banking, so it's about AI, Watson, and banking. It's about new ways of interfaces for banking. So please go there, and if you're interested in some hackathon, you should sign up there. Thanks.
Thank you, Oliver. Justin, do you have anything to add? Any more topics that we have on our mind? No next meetup planned yet. We're working on it. So, very important. We'd like to ask you guys to give an applause for actually every pitch that you heard, but clap the loudest for the startup you like the most. Who liked berries the most? That was quite loud already. I mean, you had your votes here. Okay, who liked Diversificator the most? Not bad, but I guess berries was louder, but let's go for Wroomer. I saw some people actually putting out iPads and phones, so maybe you sold some contracts already. So, last but not least, whose favorite was BeeEye? Tough one.
If I would have to say, I would say last one was it.
We should go again for the
truth. Should we go again? One more for berries. Berries? And now BeeEye? Yeah, BeeEye. I think it was BeeEye.
I think it's two winners.
I would say we have two winners as well. Okay. I'd like to thank once again the sponsors, Accelerator Frankfurt here, Livo, who put up the lovely drinks, Deloitte Consulting, and SKW Schwarz, Rechtsanwälte. That was it for me. Thank you very much for having us.
I would like to thank the guys of Startup Radio, actually, who organized all the technique, the online streaming, cheers out there, and especially also anyone else who make this possible by contributing. Our panelists, the 4 winners actually, because I think always pitching is an experience that will bring you forward somehow. And well, that's it from my side then. Thank you very much. Please feel invited to stay, network, talk, do whatever you want. I hope there's some pizza left. I fear there's no beer left. Well.